Canberra for Cam's Mortgage Minute on Monday, April 22nd. Hey, just thought I'd share some comments that Mark Carney recently made, and he said that policymakers are working diligently to devise an international bail-in regime to prevent big bank failure. But he offered no guarantee that individual deposits would be protected. He basically said that the Canadian banks in general should have buffers in place in case there's something goes wrong and emergency hits. There should be ways that they can draw on. Carney appeared to disagree on the surface with the approach taken in Cyprus last month that involved taxing deposits of depositors, but would not state his own personal position because he said that it could easily be misconstrued out there. He notes that the Canadian government, however, has pledged not to dip into individual deposits. Carney basically did not answer whether there should be a total hands-off treatment on non-secured accounts as well in Canada. Basically, deposits over $100,000 are unsecured. Anything under $100,000, the federal government guarantees. In BC, however, under the model we run, the credit unions, actually it's unlimited coverage for your depositor funds. That's exactly how they operate right now. So if you've got more than $100,000 with a credit union, it's safe and protected. Of course, the credit unions have been basically pressing the provincial government to change that policy. He says that Canadian institutions have sufficient capital and other buffers in place, basically making it hard to imagine that something like that could ever happen here. The bail-in regime, according to the finance minister, basically, he had basically talked about the same thing, Jim Flaherty, and he said that we need that bail-in regime basically to ensure that the banks here have an approach and that the government would not need to step in and intervene. On other issues, quickly, Carney said as far as interest rates go, we might expect a rise if the Canadian housing market doesn't cool and debt accumulation doesn't slow down. However, what he noted is that both are actually slowing down. So again, it seems like the proverbial boy that cries wolf. They always keep talking about interest rates rising, but hey, we've yet to see it happen. Anyway, that's the bottom line. Could it happen here as it did in Cyprus? Well, it's appeared, according to the words of our Mark Carney, it seems very, very highly unlikely. However, anything can happen these days, and at least we know that in Canada you've got depositor protection to that 100,000 mark with the banks, and of course, like I mentioned in BC anyway, the credit unions have basically unlimited protection. It's been Cam for Cam's Mortgage Minute, and I will see you tomorrow.